Oh man, in this video, I'm going to tell you why I would opt for Kadena versus Ethereum, and you're going to want to listen to my reasoning why. We're also going to look at the Bitcoin chart, we're going to look at the Phantom chart, and obviously the Kadena chart as well. Guys, don't forget to smash the like button, don't forget to subscribe. As always, check out the links in the description if you want to buy any crypto. Excuse me for where I am, but I've got to give you guys the updates regardless of where I am. The latest update you guys need to know right now is we've just had our GDP revision. What does this mean? Well, guys, the figure we had before was minus 0.9. That's an advanced reading, okay? And that officially put us into a recession. Everybody knew we're in a recession. They started playing semantics with the definition, and now you get this revision, which is very normal. You get these revisions. But as expected, in this revision, they've revised the number up, okay? So they put it from minus 0.9 to minus 0.6. Now, who knows how well they've massaged these numbers or what they're doing to kind of change the numbers. They give some explanation in here that they changed some of the imports and export figures. But the reality is, what they're trying to show is that we're in a mild recession, right? We're in less of a recession than we think. But the reality is, we're not silly, right? We feel it. We know what's going on in the economy. Everybody can feel the inflation. We can feel the differences in the economy and the difficulties. And we're in a recession as much as they want to argue. And we knew that we were even before they told us so. Now, the reason they're doing that is because that could give Jerome Powell more room to continue doing what he's doing. And his remit right now is to bring inflation down. Yes, he had one CPI reading bringing that inflation down, but he needs another reading, right? He wants to see consistent inflation downtrend. When he sees that, then he can lift his foot off the gas. I think it's still too early for him to take his feet off the gas, okay? And now remember, what are the markets pricing in? Well, this is the whole drama right now, right? Let's take a look at the Fed rate monitor tool. And let's accept their cookies because we have nothing better to do. And you can see this notch up, okay? Now, we monitored this in the video this morning. That was 54% pricing in a 75 basis point rate hike. That's gone up to 62% now. So more and more people are yo-yoing around, changing their minds. And now, because of that GDP figure, they're finally understanding that Jerome Powell's got room to do another 75 basis points. So that's why we're seeing that change. And when we see that change, we'll see risk go off. That'll be good for the Dixie. That'll be bad for risk on assets. And we'll see that affect Bitcoin to the downside as well. So very important that we understand this nuance. Now, what else is going to affect this? Well, we get a really important piece of data tomorrow called the PCE inflation. Okay, now this is another form of inflation different to how the CPI is calculated, but that's not important. What is important is that Jerome Powell uses this and places heavy weight on this. So this figure comes out tomorrow, about 90 minutes before Jerome Powell speaks. We will cover on the channel what Jerome Powell says because the market's going to be looking to see if he gives us any clues. Why does the market want clues? Well, the reason for that is the next FOMC meeting isn't until September the 21st. So you've still got another month or so until then, and the markets need direction. They're like a little baby that needs direction and needs a tapping from Jerome Powell to say, we're going to be okay, or nope, we're still hiking. So that's what the market's waiting for, and that's why we've had such a kind of boring week this week, because we're waiting for this key data. We had the first piece with the GDP. Now we need to get that PCE tomorrow, and we need to get Jerome Powell's data tomorrow. Now, why do I think that this is going to, let's come back to the point of what I was saying in this video. Why would I opt for Kadena over Ethereum? And what do I mean by that? Well, it's no surprise that Ethereum is making really good progress towards their merge, right? It's touted for the mid of September, and they've had 3 or 4 test nets now, dress rehearsals. It's gone smoothly, and to all intents and purposes, we're expecting this merge to take place. Now, there's been a whole bunch of Ethereum wars, as they're being labeled, where many people are saying, no, we're going to leave, right? And you've got a few different camps right now. And the main crux of the issue is you've got these miners who are mining on proof of work, okay? Proof of work needs miners to mine. They buy hardwares, they buy these GPUs, and they mine to keep the network up and running. When you move across to proof of stake, and again, sorry if I'm teaching you to suck eggs out here. When you move across to proof of stake, you no longer need to mine. You don't need computational power. It's about how many Ethereum you hold and you stake. The more you hold and stake, the more access you have to the block rewards. Very, very important. So what does this mean? When the merge happens, suddenly a bunch of different players get control of the network. People who are staking a lot. And guess who's staking a lot? We've covered this. Over 60% of the stake is controlled by the likes of Coinbase, by the likes of Binance, etc. And I've covered off what that means for censorship. I'll link that video up somewhere for you guys to go watch. But if you can't find it, it's called Pack Up and Go Home Ethereum. Important that you watch that video. Now, what happens then? Thereafter, all your miners they've sat there with $3 to $5 billion estimated in hardware expenses. These are miners they physically got in their houses, in their offices, mining Ethereum. That's how they were making their living. And from that date when the merge happens, they will no longer be able to do that. Now, there's a bunch of different places they can go. Right? One of the biggest options is Ethereum Classic. And a lot of people are saying, oh, Ethereum Classic is really going to benefit from this. Okay. Now, the challenge with that is I was doing some modeling, and Ethereum Classic will need to about 1,000x the network capacity and transactions in order for Ethereum miners to earn the current money they're earning on Ethereum. So pretty unrealistic, right? You'd have to become a real Ethereum competitor. Is that going to happen overnight? Unlikely. They have other alternatives, again, very small alternatives like Ergo. And then another major alternative, which Justin Sun over at Tron was trying to promote, was why don't we have an Ethereum proof of work, right? So ETHW, okay, Ethereum proof of work. And that is where they're going to do another hard fork, i.e. copy and paste Ethereum, right? So you go down the route to ETH 2.0, which is proof of work. We'll keep the old Ethereum running and call it ETHW or something else. And on that one, the miners can continue to mine. The problem with that is huge. The problem with that, and this is the reason I prefer something like Kadena. I'm going to come on to it. You're going to have to hold fire. And this is where the problem arises. And again, I covered that off in the previous video. Things like USDC, which is a stablecoin, will only support one network. When you fork, it will only support one network. So if you imagine, when you copy and paste the network, you've doubled the number of USDC, a stablecoin, available. But Circle, the company that backs USDC, who has the cash reserves in its bank account to collateralize all the USDC, they say they're only going to back one, and they're going to back the proof of stake network. Okay, and many other companies, many other projects being built on Ethereum will back the new project. So you're left with this fork, which in essence is going to be another Ethereum Classic, right? Something which you're going to struggle to gain any traction and any great footing. And this is the trouble with crypto. Every time you have these hard forks, think of it like a religion, right? You get all these sects and all these different kind of sub-branches of Ethereum. I mean, you've got Ethereum, Ethereum Classic, then you're going to have Ethereum Proof of Work, Ethereum Proof of Stake, then you have something else and something else. You just get this dilution effect where everybody loses the angle of the mission. So, coming back to my point, if I wanted part of my portfolio with exposure to a proof of work layer 1 outside of Bitcoin as my store of value play, I personally would rather hold Kadena currently, given the data I've got in front of me, than hold the fork of Ethereum, which will be Ethereum proof of work. And that's where I'm standing right now. I'd rather be in a smaller market cap, layer 1 solution like Kadena, which still has a lot to prove, loads to do, but a lot of promise, really good tech, good mission, good scalability, low transaction fees, doing all the right things that other good layer 1 proof of stake platforms are doing, but doing it with proof of work. And I think that's a really sensible hedge for me to have in my portfolio. So not everything is proof of work, proof of stake. At least I have some, which is proof of work outside of Bitcoin, which isn't considered the layer 1 in the essence that other layer 1s are considered. Okay, so that is why I would go for Kadena. Now, let's go take a look at the charts, because the charts are going to tell you an ugly story here for Kadena. And then we'll switch on over to the Phantom chart as well very quickly. So you can see here with Kadena, you're on a huge discount right now. I mean, we're trading here at $1.68. We are miles away. I'll ignore the wick up there, but you can see all-time highs are around just $7.80. So a lot of room here for Kadena, and you may well get some more downside here in the near term if Bitcoin breaks the downside of its bear flag. But for me, this channel is a great period to accumulate, right? $1.44 to $1.85. I'm happy to accumulate and DCA myself a little bag here of Kadena. Nothing crazy, nothing out of the norm of other good layer 1 solutions I have. But again, I understand it's small market cap, I understand it's high risk, but I also want a little bit of exposure to the proof of work layer 1 narrative. And in my mind, Kadena is the best position for that battle. And again, I know the miners can't just move across simply. There will need to be a change. But if I'm looking at the clean bet, what's a cleaner bet? Would you rather pick a project which is built looking to tackle that issue of proof of work layer 1 versus a copy and paste job of Ethereum, which is going to lack the backing, lack the projects, a whole bunch of complications. We've seen folks before struggle hugely, and that's my view on where we're going with that. Let's also take a quick look here at the Phantom chart as promised for you guys. And as we can see here, on Phantom, we were getting this nice little bearish continuation pattern to the downside, but as I warned you guys yesterday, we got the break to the upside. So congratulations to anybody who traded that. It's now coming back for a retest. I mean, if you exited there at 31 cents, that would have been a nice little scalp trade for you guys who are experienced. Now it's coming back in, okay? So if we see weakness from Bitcoin, do not be surprised to see us try to come back into this wedge. Now, the support against that is this 30 cent mark. This 30 cent mark is really strong on Phantom. So if we break down below that, things things won't be looking great. If I bring out the VPVR, you can see this is a really important level. We're right at our point of control right now where the key volume is here for Phantom. Let's also bring out our Bollinger Bands here on the 4-hourly, and you can see we're just getting rejected from the top of our Bollinger Band here. If I put it on the daily chart, you can see what's happened. We're getting support from the bottom of our Bollinger Band and trying to hold above this 30 cents. And the question now is, if we get good news, we can get a rally up towards the middle of our Bollinger Band, maybe to the back end of this rising broadening wedge. But if we get bad news, I suspect we're just going to continue to fall to the downside here. Maybe bring that 24 cents level back into play here on Phantom. So everything is riding on what's going on tomorrow. Really important Jerome Powell speech plus PCE data. And we've got to let the markets guide us on where we're going right now. Now's a great time for me to personally be dollar cost averaging nice and gently. I'm not chasing green candles. I'm not panicking and going crazy hard right now. If we fall to the downside, I'll nibble some more. If we carry on to the upside and get some positive news tomorrow, then great. We'll start moving to the upside and I won't be chasing that either. I'm happy with how much I've got in the market. That is why I made sure I'm in the market. I'm not trying to time my way in and out like a yo-yo. I have my position. I leave it there. If I see cheap prices, I'll buy me some more. If I see prices getting out of my control, I don't chase it. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. If you appreciate this type of content, let me know in the comments below. Go watch this video here and I'll see you in the next one.